morning, my name is James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Markets are set for another bumpy ride today as headlines surrounding the US immigration policy, as well as the historic moves on the oil price, continue to dominate. Monday saw WTI oil prices for May delivery plunging into negative territory, settling the day at minus $37.63. The first time ever we have seen oil prices turn negative and the lowest price for a rolling contract since 1946. Of all the monstrous market moves we've had over the last few weeks, Monday's moves on the oil price will have to be up there as one of the most dramatic. On Monday, West Texas crude oil for May delivery saw prices plunge into negative territory and settle at those historic prices. That's right, oil sellers are having to pay buyers to take the stuff off their hands. So why is this happening? The global pandemic has caused lockdown on a global scale, bringing economies to a standstill. With industry virtually grinding to a halt, there is less demand for oil. Over the course of the first quarter of 2020, global oil demand collapsed by 1/3, while stockpiles increased by 48%. As oil futures approach expiry, they tend to represent the real current market value. The May contract prices represent that due to storage running at record highs, due to the demand running at record lows, sellers are actually willing to pay buyers to take oil off their hands as there is nowhere to store it. Elsewhere, Monday also saw Donald Trump take the action to close off the US borders to immigration as the coronavirus crisis worsens in the United States. The move by the president comes after he has been widely criticized for his handling of the pandemic. It also comes as hundreds of thousands continue to protest in the US about many states reopening and ending lockdown. Nobody will be surprised that the president is giving out mixed messages, as on one hand his Twitter account talks about ending lockdown and being in solidarity with protesters, while on the other he acts to close borders to stop the spread of the virus. One can't help but think that half of this action has an eye on November's election. Today sees quite a lot of data due for release, with the headlines being the UK unemployment data for March, as well as retail sales out of Canada. However, due to the nature of the data, these two could well be largely ignored by the markets unless we see a huge miss in expectations. Something that may garner a little more attention will be the ZEW business survey out of Europe. Expectations for the headline business confidence current climate reading are to come in at around negative 77 from negative 43.1 in the previous month. Tuesday also sees the release of some key earnings figures. Most notably, we will see data from Netflix. Expectations are for Netflix to actually have performed well during this crisis. Lockdown could well have boosted subscriber numbers across the globe as many individuals are stuck in their houses. Earnings for the FANG giant are expected to hit $1.65 per share, which would be a substantial increase from Q4's reading of $1.30.